Well, hello, Maverick traders. Let's get into October 16th. It's Wednesday for a market roundup. Joe with you here. You guys know this drill. Let me talk about the meaningful news of the day, some technical analysis as always, and then let's go ahead and share some trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that this bullish pattern continues. We had a little bit of a hiccup yesterday. I would expect a little bit more of a bearish response, and we do have room for it, by the way. Well, how do we finish? Let's do this real quick. The Dow, the S&P, and the Qs, pretty much, I'm going to call it flat, which, boy, 0.79, 0.47 isn't flat, but it is, considering the last surge we saw up to these new highs. The Russell being a big mover, 1.65%, folks. In fact, that is my chart that I am looking to trade. This thing actually had a really good surge to the upside in spite of what we saw yesterday as the markets correct. Well, at least the Qs, the SPY, and the diamonds. Oil flat. It's had a pretty rough ride yet. We'll talk about it here in a second. And then gold at up 0.43%. What do I mean by that? Let's go to the daily news here. So it's flat across the majors today as the markets retain their bullish pattern. Let's believe in the +3 outlook that we have because it has been working for quite some time. Oil, on the other hand, we saw that down 0.11 after a pretty good fall back down to $70 a barrel with promises that Israel's not going to bomb Iranian's oil fields. Well, okay, I guess it was good enough for the futures market as it fell rapidly back down to 70. This is also paired with some concerns of some slowing in demand, specifically out of China. Let's move to the advanced decline line. 76% of stocks advancing, 20% declining. Definitely a nice move on all counts. Below the 50-day moving average, 69.31. We're back to the 70-30 mark that we've seen pretty much since the beginning of September after we set that last low. Let's move straight into the charts. You can see nothing's really changed. I'm going to just keep my outlook here. A very nice move to the upside that we've been seeing. We talked about pullbacks and moves higher. We had a pretty good bearish engulfing candle, folks. I would not be surprised for this to come a little bit lower. So anybody that's a little bit worried about putting more money to work to the upside here, I get it. That's fine. It doesn't have to consolidate or move higher from here. In fact, for it to pull back to the 20-day moving average might be a little bit more healthy when it comes to a sustainable move back up to the upside. It doesn't mean that it's going to, but it is definitely showing some strength. And I'm not going to change the outlook that we have on it. Let's go to the Qs here. The Qs looks a little bit weak, but it had done a lot of work to actually get back up to this point. I thought this last move here towards the end of through September was very impressive. We know that this thing can jump around and jump around fast. It did already exceed this previous level here only by a day or so. It fell back, but we've got the 20 where it's supposed to be and the 50 where it's supposed to be. So this could be a nice little hammer candle that could turn around. Even if it goes a little bit lower, it's definitely glass half full. Not nearly as strong as the SPY or the diamonds, but it's showing some resilience. So we have to stay positive in that as well. Let's get into the heat map, folks, and you're going to see that some of the big wigs here were probably the only reason why we didn't have a stronger move overall. Microsoft, Apple, Meta, Google, Amazon. Yeah, but look at NVIDIA. Big, huge move to the upside. And then if you just kind of glance your eyes across everything else, let's see if I can kind of map it out here. This is why we have the majority of stocks up, right, versus down. But percentage-wise, it kind of just, it nullifies everything. I do think that today's move was a little bit more optimistic than it ended. We are in earnings season, so we're going to see if that has a lot to play into it, or a little. We'll see where that goes, but be mindful of that. But strong overall. So what's my outlook? It's the same. Above the 20, above the 50. The slope looks great. The monthly outlook's going to stay to +3. I think this is a consolidation at best right now. It is. It could pull back. Once again, I would be very comfortable letting this, let's zoom on the small chart here, folks, pull back to this area, and I would still stay to +3. In fact, I would be a little bit more motivated if I could see it have a little bit of a pivot point at this area versus something sideways to up. I'm more of a pullback person. However, the markets are going to do what they do, and they have proved themselves to be up in this +3 category. So let's just jump into some of the trades that I have on my watch list, and nothing's changed. I love GILD, and it looked great, and it moved higher. It's a great trade. It triggered last week. It's still continuing slightly higher. I want it to be more aggressive. That's fine, but it's working out. But the Russells is something that I thought was really interesting. Adobe on the bear side, Moderna on the bear side. Both have been on our watch list. So let's take a look at one of each. I want to start with the Russells because this one was the one that was very surprising. I shouldn't say surprising. Understand, folks, that this candle right here, the markets were down pretty big. All of them, diamonds, the Qs, and the SPY. The Russells hung in there. They did come back and they did close on that lower part, but that's okay because guess what? Boom, they jumped up. What I like about it is a big push to the mid caps or small caps to the upside, breaking out of a pretty wide channel that it's set since about mid-July. And I like the fact that it did decide to turn after it broke some moving averages. It stayed in this range and it is now emerging. So if there's money to be put to work for some of the bulls out there, this will probably be the place to look. At least it's the place that I'm looking. On the bear side, guys, it hasn't changed. I've got my bear watch list, and this is one that is also triggered. This is Adobe. Adobe had a bounce here that looked a little bit, oh no, I can't believe I got in as it broke down. But guess what, folks? It's rolling right back over. Not only that, but it's setting a pretty decent lower channel here. So I'm more than comfortable. If you're not into bearish now, you could see another opportunity today or even tomorrow if you want to let it hesitate. Anybody that's got this for a week or two, you're sitting pretty, just let it go. The target for me is going to be right around that 484 level. Sorry, folks, that's not the best line. But over the next week, week and a half. But what I've been seeing in my bear trades and my bull trades is they continue to go in the direction that I've been looking at. A lot of them are volatile. Yeah, Adobe's a big stock. We've got some larger priced stocks out there, Tesla. And however, the bears are going bearish and the bulls are still bullish. So I'm going to keep the outlook the same. The markets continue to show bullish price action. A little bit of a hesitation yesterday. I mean, they could change tomorrow, but I'm charting the overalls. I'm not charting the day-to-day reactions or the political outlooks or any of the worries that might occur overseas because, boy, it's interesting to see how quickly these markets just shake them off. Keep an eye on existing watch lists. I am a fan of scanning week to week, but I have found that carrying some of the trades that I've already dumped from previous weeks, if I would have kept them on my watch list, guess what? They're still doing what I expected them to, meaning they're going higher or they're going lower. Jobless claims, retail sales, and the Philly Fed are coming out. We'll see where they go. I don't think it's going to be so much as economic numbers as it's going to be outlook, and I think we're going to lean more and more to earnings. Down at the bottom there, folks. Yes, I think earnings will drive these markets, and unfortunately, so will political posturing. Regardless of what side you're on, understand there can be reactions, and I'm going to call them micro reactions, but just trust in your overall sector outlooks and stock outlooks. We got Netflix, PG, AXP, Schlumberger, right? Schlumberger is coming out. This is the next day or so. Alcoa did come out. Let me take a look. I see it's up about, it's up $2, $2.40, up about 5.75% right now. I'm not sure what that number of the results were. But it did break above its resistance. Right now it's sitting at about $44.60. So just be mindful of that and make sure that you're following your rules and being responsible with your position sizing and trade frequency. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everybody.